reaction on this? Andy Brough, Executive Director at Schroder Investment Management, is here in the studio with us. Good to have you on the show, as always. So, Eric Daniels stepping down, but a year from now, is the timing a bit odd?
Well, not really. I mean, if you look back, sort of 18 months ago, or when it became apparent that HBOS was causing Lloyds Bank a lot of trouble, then everyone was immediately calling for Daniels to go, and what he provided then was some real stability. And Wim Bischoff came in as chairman, and I've been at Schroders for God knows how many years, and Wim Bischoff used to run Schroders. And one thing that Schroders was always good at was sort of stability and promoting people and taking the right long-term decisions. So I think Wim Bischoff's gone in there and just kind of looked at everything and hasn't panicked. And Lloyds has now come through, and it's ironic, isn't it? We've gone from a situation where 2.5 years ago there was no capital, and you open the Sunday papers, and Lloyds has got so much capital that they might actually start returning it to shareholders. And
which would also be the UK taxpayer.
Which will be the UK taxpayer. And but I think so. A year gives people plenty of time to make the right decision, because Lloyds is a huge bank in terms of the UK. It's absolutely crucial that you get the right team at the top to make sure not only are you generating profits for shareholders, but also you're encouraging lending to make sure that growth is sort of continuing in the future, and you return to dividends. Let's not forget Lloyds Bank was owned by virtually everyone because it paid a safe, solid yield and was seen as a safe, solid bank. And absorbing HBOS has been problematic. If you look at the banks in general, it's never been a better time to be a banker, because you're paying your customers sort of 0.5% or nothing, and you're charging Mr. and Mrs. Jones or whoever wants to borrow money 5 or 6%. So you can make the huge profits that you've needed to absorb the sort of property loans and the venture capital loans and all the other loans that you've made at the peak of the market. And whoever comes in will be inheriting quite a strong situation, in my view. And
but also politically quite difficult one, because of course with the government holding 42% of the assets and lots of changes in the banking sector potentially ahead, who would be the good man or woman to take over that responsibility?
Well, I'm not going to pick an individual. I would say.
But someone from inside or an outsider?
I think. Well, you look at both. The finance director of Lloyds Bank, who's been there, she's done a good job.
Helen Weir.
Helen Weir, and I'm sure if you're a finance director, you'd like to have a chance of the title. You don't want to get to the end of your career and have one of those sort of Marlon Brando moments. I could have been a contender. But I think the board would take a very considered situation and say, look, the UK government, 42%. are now virtually in the money with Lloyds Bank, and they must be looking at a situation now whereby the value of Lloyds Bank and Royal Bank continues to go up, and at some point there will be a placing of shares and the government will actually get their money back. It's
not easy to be a banking boss these days. We had John Varley, Barclays leaving, HSBC's Stephen Green, and now Eric Daniels, and UniCredit's Alessandro Profumo also probably going to retire.
I think if you've been a banker for the last, you had a sort of honeymoon period, a fantastic period, and you sort of 10 years economic growth, everything you touch turned to gold, and the last 3 or 4 years have been like firefighting, and I just think it's a very attritional job. At the best of times, when things are going badly and everyone's saying you're terrible and should be sacked, then you get things back on an even keel, and it's always good to leave when things are better. Rather,
a quick word on Deutsche Bank selling new shares today, 30% below the closing price yesterday.
Well, at the end of the day, if you're going to raise new equity, you've got to find a clearing place in the market, and Deutsche Bank have decided that 30% is the level. Let's hope that's the right level.
Thank you so much, Andy Brough, Schroder Investment. Now.